welcome back to tonight's session here. So, guys, this is going to just be a freelancer here. I want to share this here with you really quick, right? So, if we see this right here, we see that this here is a Monopoly board right here, right? And I'm sure we've all played some type of Monopoly, right? It says customary, but this is say for instance Monopoly, right? And a lot of times, if you start out with Monopoly, everybody starts out at the same place, and everybody starts out with some type of dollars, right? Equally, right? Equally dollars. But the key to Monopoly and winning Monopoly is the one that owns the most land, which is assets. And so Monopoly has taught us even today, you can have the same amount of money when you pass go, that's you getting paid. But each time that you get paid, if you land on somebody else's property, you have to pay, which is in this particular case, we look at it as a bill or some type of liability in itself. But when you use your money and you go buy land and you go buy assets and somebody else have to pay you, that's actually money that's actually coming into your household. And so in this scenario, when we look at this here, right, this is the reason why I'm sharing this here with you. We want to consistently focus on things that's actually going to be paying us, not actually things that's actually going to be taking money out of our pockets. Things that takes money out of our pockets is when we make the decision on the weekends to go to the mall, or when we go and we travel to different locations, right? And when we don't necessarily have it and we put it on a credit card, that's going to actually take money out of our pocket because now we're paying interest on it. So we want to focus on things on a mind shift to help us put money in our pocket. So that's one of the biggest things tonight. What I want to share is this investment fund right here is a very, very good investment fund. And we haven't been in it. And it happened over the weekend where there was a big conference. And so there's a lady that's actually on this call here. She is from, let me make sure here. Let me see here. Dewan, are you on? I think I've seen Dewan. Yeah, Dewan is on. All right. So Dewan is from Omaha, Nebraska. And this fund here tonight has a lot to do with Omaha, Nebraska. All right. Can anybody tell me what happened this past weekend in the financial world in Omaha, Nebraska? Now, Dewan, you should know this.
I know it probably was the Warren Buffett's shareholders meeting every May.
Yes, yes. So, Dewan, you hit the nail on the head. So, guys, this weekend, and this is the topic what we're gonna be talking about tonight, right? In Omaha, Nebraska, this weekend, Warren Buffett, which is 93 years old, every May he has a annual Berkshire Hathaway annual shareholders meeting, right? Warren Buffett, as we know, is one of the greatest investor minds of all time in itself. And so, guys, guess what? Warren Buffett has different investment funds that we can actually invest in, right? And so, one of them tonight is I'm gonna share with you. And if you guys been hearing talking to me here lately on one-on-one phone calls, I've been putting members into this particular fund, but I want to show the whole community tonight this one particular fund that I'm talking about. So, this one fund here that I'm talking about here is called Berkshire Hathaway. It's Class B. If you see over here to the right here, you will see here Warren Buffett here, right? So Warren Buffett here, the stock symbol on this one fund right here is called BRK.B. All right. BRK.B. And so what this does is this Berkshire Hathaway fund, it invests into a conglomerate of different companies. Now, one of the biggest funds that's in this right here is Apple. All right. So we see here, right, what's inside of Berkshire's Hathaway portfolio. If you see right here, Apple is one of the biggest funds that's part of this Berkshire Hathaway. And so here, right, here's the top Warren Buffett stocks by size, right? The 10 different stocks inside of Berkshire's portfolio. Bank of America's in here, Apple, Coca-Cola, Kraft, Heinz. So, guys, here's one important piece here when we look at this here, right? Companies that's inside of this particular fund right here are companies that's been around for a very, very long time. I'm talking about long, long time. Bank of America, your Apples, your Cokes, right? Your Coke has been around for a very, very long time. Now, let me show you guys this right here, right? There's a gentleman on here. His name is Mr. C. I'm gonna call him Mr. C, right? We had Mr. C when he first opened up his investment account. We had him in this Berkshire Hathaway, and he's been in it now probably a good 5 or 6 months, and he's done very, very well in his Berkshire Hathaway. All right. Now, what I'm going to show you guys is this Berkshire Hathaway compared to the S&P 500 index fund. And we're going to do year by year comparison. And the most important piece on this here, I want to share here with you guys is the fact that whenever there's volatility in the markets, this one particular fund right here, this Berkshire Hathaway fund, does not really experience a lot of volatility. And so let me share this here with you. All right. Now, when we actually look at this right here, we're gonna do some comparisons right here. We're going to go right here and we're going to look at this new fund right here. Been posting this on social media. I don't really give this out. I only give it out to the members that's actually subscribed to the Let's Win Financial community. So let me just say this really, really quick here before we actually go into this. I want to personally thank you guys, the Let's Win Financial, right, for investing into yourselves by being part of this community, by being on part of this phone call tonight and actually growing your money in itself. By you being on this call tonight, you're actually investing into yourself and you're entrusting Less Win Financial. So, first of all, let me say thank you for entrusting Less Win Financial that's been in existence now for 4 years. But I've been doing personal finances personally myself since 2009. All right. But let me go back into this fund right here. So, for the ones that just joined, we're in this fund called BRKB, Berkshire Hathaway. This is what this new fund right here. So, guys, if you look here from 2024 to 2004, you're going to see a 20-year history here. And each year, here's how this Berkshire Hathaway fund has performed every single year dating back to 2004. And now over here, you will see the S&P 500 fund. This is the funds that you have in your portfolio that's called VOO. It follows the S&P 500 fund. This fund right here, BRKB, I want to bring one important note to you. You guys remember back here in 2022 when you was investing with me, when the market was down 20% because of inflation? And man, we saw a bunch of red that year, man, a bunch of red. I mean, I was getting text messages every day. Sure, when should I get out? Sure, when should I do this, right? But we seen that market just bounce right back. But guys, look here. This Berkshire Hathaway fund, right? Whenever there was market volatility, guess what happened? It was actually up 3%. So, guys, what we have seen this year is the market has been up. Last month was down. Last month was down, but before last month, the 5 months before that, the market had been up 5 straight consecutive months. So when we go back right here and we look at this Berkshire Hathaway fund, it's going to give us some type of protection whenever there is market volatility. Go guys right here, you look at this S&P 500 fund and go and look at 2008. The S&P 500 was down 38%. This is one of the worst years on the stock market. But look at what this Berkshire Hathaway fund did, right? It was only down 32%. I should say only because that's like big, but it wasn't down as much as 38%. All right. Also, too, the market was down again 6% in 2018. Guess what this Berkshire Hathaway fund did, right? It was actually up 3%. So what I'm saying here is we still stay heavily with our S&P 500 fund, which is the VOO, right? VOO. We still stick with VOO. But now, guys, what we want to start doing is we want to start adding new monies that we put into our accounts. We want to start putting it in to this BRKB fund. All right. BRKB. Because BRKB, if we go and we look at this here, right? Let me go right here. So BRKB. I'm about to show you guys in the last 20 years how much this Berkshire Hathaway fund has been up in the last 20 years, right? So let's go and look at this right here. So this Berkshire Hathaway fund, any new monies that we start adding to our portfolio accounts, we want to start adding and put money into our BRKB. For the ones that set up on the automatics, you can contact me and we can get set up on the Berkshire Hathaway automatic as well. Because what this is going to do, this Berkshire Hathaway, for the ones that just joined, this here is owned by Warren Buffett. All right. We know Warren Buffett is one of the greatest investors of all time. And this is owned by Berkshire Hathaway here, right? Berkshire Hathaway. So, what I'm about to show you guys, we want to make sure here. This is important note, another important note to share with you guys. There is a Class A Berkshire Hathaway, and there's a Class B Berkshire Hathaway. This Class A Berkshire Hathaway is about $300,000 per share. You can't buy that as a fractional share. But the Berkshire Hathaway B, you can buy that as a fractional share. So what I'm about to share here with you guys is right here, right? When I go over here, oh, I don't want to go to the news. I want to go to historical data, right? So when I go over right here to this historical data, I want to show you guys what this Berkshire Hathaway has been doing over the last 20 years in itself. What's the performance of this here? So I'm going to take here from May 2024, and we're going to take this here all the way back to May of 2004. So we're going to go right here and look at a 20-year history of this Berkshire Hathaway here, right? So we're going to go right here. You see 2004, and then we're going to hit May. All right. And then we're going to hit May 8th. All right. So you see May 8th, 2004 to 2024. We're going to hit apply here. And once we hit this apply here, this is going to give us a 20-year history here of the Berkshire Hathaway, right? Berkshire Hathaway right here for the ones that just joined. This is the new investment fund that I want us, I'm recommending us with new monies to start investing in, right? BRKB. 20 years, guys. Here's how this investment fund has performed. I'm going to scroll all the way down right here, down to the bottom. And it's going to give me, you see these years over here, it's by months. This every month here, right? But I'm going all the way down. And when I go all the way down to 2004 here, I'm going to just keep going here, right? It's going to give me the total gain on this right here. You see this change percentage right here. So from May of 2004 to May of 2024 here, right? Uh-oh, not sure what happened here. But hold on one sec here. I'm not sure what happened. But we saw here, right? You see this here? 583% here, right? Now, the first person that can tell me on an average return, right, that you're going to get a $25 gift card, Amazon $25 gift card. What is the average return over the last 20 years on this Berkshire Hathaway? The first person that actually give me the average annual return on the Berkshire Hathaway over the last 20 years, and you can go unmute, I'm gonna give you a $20 Amazon gift card. All right. Matter of fact, I'm gonna make it a $50 Amazon gift card. All right.
Is it
What's
150.
150.96?
No, 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 no,
No.
nope. The average annual return over the last 20 years for Berkshire Hathaway, $50 Amazon gift card.
$583.60.
How much?
583
So, guys,
68.
I want you guys to listen to me. It's up 583% over the last 20 years. How much is that averaging per year over years? Now, I know I got some math wizards in here now. Just take your phone and just do the calculation. It's up 583% over the last 20 years.
29.15.
25.
All right. I think that was Maya that came on first and said that, right? Was
Yeah.
that you?
The 29.
Yeah. All right. So Maya, I'm gonna give you that $50 Amazon gift card. So guys,
Hey.
this is what I'm saying right here, right? Berkshire Hathaway is telling you this change percentage over the last 20 years, it's up 583%. If you divide that by 20 years per year, this is averaging 30% per year, 29% per year, right? That's very important because when you think about it, when you look at investing, right? The S&P 500 has been averaging 10% per year, right? But guys, this right here is averaging almost 30% per year on average, the BRKB. So this is important here for us to start adding new money to this. And the reason, as a recap to this, is because even in a volatile market, Berkshire Hathaway, even when we had a 20% downturn market in 2018, Berkshire Hathaway was still up. In 2018, when the stock market was down, Berkshire Hathaway was still up. In the last 20 years, if you go back and you look at this chart right here, right? You go back and look at this chart right here. Let me show you this right here. In the last 20 years, you will see that Berkshire Hathaway has only been down 4 years in the last 20 years. So, guys, this is why it's important while I'm sharing this information with you. It's because a lot of times your portfolios are very, very aggressive. I have them set up to where they're very, very aggressive because I want them to grow. But there are times like last month when we have volatility, when the market is down 5%, when the market was down 5% last month, where your Berkshire Hathaway won't be as volatile, but it's going to continue to keep growing for you as well. So I want you guys to make a note of this, right? These three investment funds, right? These three index funds. Index fund, all it is a collection of companies inside of one basket. Here's how we look at our three top new investment funds, right? We still have our NVIDIAs, we still have our individual stocks. That's a little bit different. Our first one that we primarily own is the QQQ. The QQQ, guys, has been averaging 50% per year. So that's like the top dog. We don't mess with that top dog. We continue to keep investing in the QQQ. We continue to keep investing into VOO. It's been averaging about 25% per year over the last 20 years. The new fund that we add, which is we add the new dog into the family, right? It's the BRK, the keyword B, not A, B, BRKB. That's the third dog that we add into the family now when it comes to the investment funds part of our portfolio. All right. Now, guys, I told you I'm gonna talk from 8 to 8:30, and it's 8:28, right? So I'm basically done from here. I want to take your questions and we go from there. So you can any questions you can open up. And it can be any general financial question.
Sure, and it's Maya.
Yes, ma'am.
What should be our new breakdown now with us adding this to the mix in terms of our investment? Because you know how you always, well, not always, I'm just giving an example, like 40% should go to VOO, 30% should go to QQQ, NVIDIA, and
So
Apple.
Maya, let me ask that question here for you. That really depends on that really depends on each person a portfolio. So you just text me and say, Sherwin, based on what you currently have now between you and the boys accounts, right? How do we add the BRKB into my portfolio? And I'll advise that for any one of you guys because everybody portfolio is kind of structured a little bit different. So
Okay.
just, I would say, okay, look, we start out with BRKB at 10% of the portfolio. Right now, we won't, the initial deposit we put on it won't be 10% automatic, but we continue to build it up. And eventually we want to get to that goal, that target of it being 15% of the portfolio.
Got it. Okay.
Yeah. But if you text me, we'll get you lined up on that one.
Perfect. Thank you.
Yeah. Any more questions?
Sherwin.
Sherwin, this is Derek.
Derek, how's it going, good brother?
I'm doing all right. Is that an actual fund or is it a stock? Because I was trying to see if it had an expense ratio.
So it's a index fund. So it's definitely not a stock. So it has about 20 different companies inside of it. Now you won't be able to go on Fidelity anywhere and especially see the 20 companies inside of it, like the breakdown, because it's managed by Warren Buffett. He's buying shares, he's selling shares every quarter. But if you look at this fund here, right, it's based on older companies, Coca-Cola, Apple, So these older companies, right? So that's why when the market was down, his portfolio don't be down as bad because now he buying mom and pop type companies that's been around for like generations. And so he's just a very smart guy. So we want to get behind him and his investments with that there. So to answer your question, Derek, it's not a stock, it's an index fund for sure.
No expense ratio or anything like that?
I'll have to look at it. Let me see here, Derek. That's a very great question here. We probably have to answer that on a one-on-one detail because I don't want to get too nerdy on that type of PE. Let me see here, PE ratio. Derek, me and you we'll get together on a one-on-one basis on the PE ratio because I don't want to get too. Yeah, here see the PE here 9.25. So we'll get together and we'll discuss the breakdown on these numbers right here. But yeah, yeah. So great question.
Sherwin, I have a question.
Yeah.
This is Brian. So if QQQ, what have they been averaging per year for the last 20 years?
Oh
And
man,
VOO.
that's a great question, Brian. So you know what? I say 50%, right? But here's one way to just to do it, right? Let's just get right into it here, right? So we go right here and we type in QQQ right here, and I'm gonna go ahead and put it in right here. So another thing too, Brian, I'm gonna talk through this here as I look this up here, right? I want to talk about that legacy center. Are you familiar with that legacy center there in Atlanta? I know Dewan is.
Yes, I am.
I want to talk about that for a second when I get done with this here, right here, because the guy that actually bought that, I heard his story the other day and how he bought that fund. And I said, man, I gotta share this with my community, man, because that brother there, man, his story and how he bought that is amazing. All right, so we're gonna talk about that in a minute. So, Derek, so Brian, check this out. 2004, May 2004 to 2024. I'm gonna hit apply right here, right on the QQQ. And so basically, this right here is going to show us when we break this down. I'm going to scroll all the way down right here to 2004, over a 20-year history right here. And so, Brian, I want you to tell me this number right here, right? What's that number right there?
That's
How much?
that's 1,108.96%.
So, Brian, check this out. You got your cell phone on you right about now, or you own it? Can anybody tell me, right? I give this person right here $25 Amazon gift card. How much is that averaging over a 20-year period? And Maya, you can't answer because you already got the $50 Amazon gift card. Over a 20-year period, how much is this averaging per year?
That's 55.448.
Is that right? Let me do my math. 1108, and we
Yes.
divide that by 20. How much is that, Brian?
55.448.
That's you exactly
55.448.
right. That's 55. So to answer your question here, right, that QQQ is averaging 55% per year. All right. That's why I give you this financial education, right? We've been at QQQ for since you've been knowing me, but we introduce you to this BRKB. It gives you diversification because now if QQQ is down big, that Berkshire Hathaway ain't gonna be down as big because it's investing in some older companies. It's investing to your grandma and grandpa, right? Whereas QQQ, you invest into these new boys now, right? These young kids, the technology piece, all right? But great question.
So again, just to reiterate, the breakdown should be, you said to start off about 10%.
So we eventually want to get the Berkshire Hathaway up to 15% in all portfolios.
Thank you.
Yeah, yeah, yeah. Hey guys, so check this out really quick. I want to share this here really quick. Because this right here has been pretty big in Atlanta here, right? It's just one center right here called the Legacy Center. I can show you a better picture here. Hold on one sec here. It's this Legacy Center right here, right? This was a black owned. This was owned by a gentleman by the name of Jay Morrison. He defaulted on the loan. He was asking people to invest into this investment and buy this building right here, right? He had about 15,000 investors, and people was giving him money, $1,000, 2,000. I know one guy even gave him $40,000, right? And so Jay Morrison, he defaulted on those particular loans and he has not given these investors any of their money back, right? So he sold this building right here this week. And there was actually the guy that actually bought this here was another young black brother, right? And I'm gonna see if I can find him and show it to you guys. Show you guys his brother right here, right? Because this guy right here, he said in his interview, right? He said that in the last 2 years, he didn't buy any cars, he didn't buy any trips, because his sole focus was he knew that he wanted to buy this this legacy center here, right? And I thought that was so key because he sacrificed, right? He paid about $3.4 million for his legacy center. And now that legacy center, what he's going to do is he's going to use that center for events like weddings, but he's going to use it for the culture to teach people about financial literacy. And this is like a commercial business building in itself, right? So you can rent out spaces, you can have your job there. I mean, it's all different type of things. It's like a multi-purpose thing that he could do with it. But I thought that was key though, that this brother here, right? He trades stocks, he trade options, but he was able to buy that building for $3.4 million. I'm gonna see you guys an article on that, how he bought it. But he used a lot of his cash that he saved up over the last 2 years, and he was projecting to use about a $4 million down payment to buy this building. So he had about $4 million to buy the building, but he was actually able to buy it for $3.4 million, and he bought it all in cash money. $3.4 million for this building right here. So, guys, that's when I tell y'all this right here, right? When I went back and I showed you this one picture right here when we first started, I showed you this simple principle right here, right? This simple principle. Where is it at right here, right? We've all played this game before, Monopoly. But us, when we look at the money that we make, you can make $300,000 per year, but it don't mean nothing if you spend $299,000 of it. But if you take this money, and Monopoly would teach us, if you take that $300,000 now and you take $50,000 per year, and now you start buying some land, and now you start buying some real estate, and now you start buying BRKB and QQQ and VOO and NVIDIA, right? These are assets, right? All it's going to continue to do, right, is fuel you in your financial trajectory. Money and everything. Don't get me wrong, money and everything. But it's getting us to a point to where it can give us the freedom. We don't want the money, guys. Y'all want the money. You want freedom. You want to get to a point to where you can go to the beach on a Thursday and you ain't got your supervisor calling you. You want to wear a Rolex, but a Rolex don't mean nothing if you got to look at your time and figure out what time that your lunch break over with, right? You could drive a Rolls Royce, right? But a Rolls Royce don't mean nothing, right? If you got to be on somebody else's clock or if you're on somebody else's dime. We want the actual freedom, right? And so when you got freedom, you can do anything that you want to do, right? So that's what we working towards, financial freedom. That's what that means. Freedom from being free from a MasterCard, being free from a Visa, right? Being free from these creditors that's calling us, being free from avoiding from looking at our bank accounts. It's a Wednesday and we know that we getting paid Friday and we only got $47 on our bank account and we ain't even trying to look at our bank account because it's depressing. We don't want to look at our bank account. That ain't freedom. We want to be able to go in and say, you know what? Oh, Friday is payday. I don't even realize it's payday, right? Because I'm building all these assets, right? And I'll say this and I'll be done. And a wealthy mindset will look at it like this right here. They get paid, they buy assets. A broke mindset, I get paid and now I'm going shopping. What we want to focus on and what I talk about a lot is we want to go shopping for assets. When I look at Maya, she's a young mother, right? With young kids. As soon as them kids was born, she opened up them investment accounts. Maya try to focus on maxing out her Roth IRA. I spoke to a 48-year-old young lady in California yesterday. Has been a Let's Win financial member for over 3 years now. She was so excited because now that she saw her investment account When your investment account hit over 100, that's the hardest thing to do for your investment account to hit $100,000 because compound interest, it will have to work hard to get to $100,000. But once it hits that $100,000, man, that compound interest, it works even quicker for you. And so that's what with the goal that we want to get to. I look at Derek right about now. Since he's been working with Let's Win Financial, his goal is maxing out that Roth IRA account, right? And so I look at, another good member, Nelson. I don't want to say the name, right? But I know she was working on a debt management plan. She gonna have them debts paid off. And she had majority of her money in a savings account. So now we working on towards, okay, look, we want to take some of that money from a savings account that's earning 4%. And now we want to start having it work a little bit harder and getting 8%, 10%, 20% per year, right? Because that's the mindset, right? We got to be able to have the mindset for our dollars to work harder for us over time. I just got off a call with a church tonight, and I told them the best dollar that you can earn is the one that you don't necessarily have to trade time for. We go to work every single day and we trade time for our dollars, but the dollar that you do not necessarily have to trade time for that comes in and work for you and comes back into your bank account or back into your investment account is the best dollar that you can earn. And even the dollar that's better than that is the dollar that's going out there and making money for you, but it's making money for your kids now. That dollar even better because guess what? It's got more time to even grow because it's working for your kids. So when you look at these investment accounts like Friday, when I was at the New York Stock Exchange right here, the market went up big. Apple was up big. And all I could think about is I've been in this building several times. It still feels new and fresh to me. I'm passionate about this, but I said, you know what? Not only and the Let's Win Financial members investment accounts are up, but the ones that actually have kids, their kids investment accounts up. That's what it's all about, guys. Creating a financial freedom not only for you, but setting a trajectory for your kids. I'm done. So any more questions? Any more questions? Any more questions here? Keep working, guys. I'm proud of
I
y'all.
just
Keep
want
working.
to add.
What's up, Derek?
I just want to add that comment you just made. Never trade time for money. That's Robert Kiyosaki again.
Yeah, absolutely. Any more questions?
Sherwin, I have a question, but it's not about tonight. Is there any chance you doing teaching about trading stocks or like investing as far as options and puts and calls and things like that?
Man, you know what, Derek? Brian, I can do it on a one-on-one basis. During the pandemic, I did a lot. I was giving out signals, but it's very risky. And a lot of people are already kind of like risk averse when it comes to investing already. So when we see online and social media, people post their wins, but they will not show their losses. So you really got to be knowing what you're doing when it comes to stock options, when it comes to trading. Like for instance, right? A person can make a lot of money on Tesla right about now. They're shorting Tesla. So you put in puts for Tesla because we see Tesla has been going down. We actually got out of Tesla in the Let's Win financial community. So we see that a stock is actually going down. You can bet that that stock is going down. And once that stock go down, you actually make money when that stock go down because you're betting on it going down by putting in a put. So I want to teach it, but it's to the point where you can lose a lot of money into it and it's quick money. So I be very careful when I teach that because my main motto, my main mantra is creating financial legacies, right? For generations. Brian, most people want to get the quick money. When you get the quick money, though, they go and spend it. And I get it, right? I get it. Let me say this, right? And that's a great question, Brian. Coming back to you. Guys, I was in New York this weekend. Y'all remember her name is Nancy. She gave us the last webinar. She talked about the NACA and how to buy a house for 0% down. Well, at the beginning of June, it's going to be the first or second week in June. She's going to come back to us. Nancy is going to teach us how to make additional income per month. Nancy says on an average, she makes $1,300 per month filling out surveys. Anybody want to make extra $1,300 a month filling out surveys at home? Well, guess what? Nancy gonna come back the first week in June, right? You could be sitting at your house now, watching TV, filling out a survey, and on an average, making $1,300 per month. That's paying somebody mortgage bill. If not, half of your mortgage bill, 13 on an average, that's how much she's making, right? So she's gonna come to the Let's Win Financial community and she's gonna teach us, she has a program where you can go every single month. She give you these different surveys that you can fill out and make additional money in itself. So I'm excited about having Nancy back. It was great networking with her. I met her on social media. She did a webinar, but we met up in New York and did some professional networking. And so she's excited to come back to the Let's Win Financial community and just continue to pour more information and resources to us. My twin brother's with me in New York as well. And he was with me and Nancy. He said, wow, man, she has a lot of great information and she's very resourceful. So grateful to cross Nancy and herself. So look out early June. She'll be teaching us how to make some additional income through those surveys. Okay, guys, this has been good. Any final questions before we go? I try not to keep these long. I like keeping short and sweet if we can. But any more questions? All right. If not, just continue to reach out to me one on one. If you haven't set up a one on one with me in a while, let's make it happen and we'll go from there. But, guys, as always, let's continue to win. You guys be blessed. Have a great evening.